Hi everyone, good evening. Welcome to our webinar. My name is Charlie. I'm the dealer from Phillip Capital Penang branch and I'll be your host tonight. So before we start, here's a little disclaimer. For what we are going to share tonight is just for general information and educational purposes. So it does not constitute to any recommendation to buy or sell any investment products. First of all, I would like to have a brief introduction about our company, Phillip Capital Sendirian Berhad. Phillip Capital was incorporated in 1995 and it is a wholly owned subsidiary of Phillip Capital Holdings Sendirian Berhad. As some of you may aware that we were formerly known as Phillip Futures, but as we grew and expanded our services and offerings, we have renamed ourselves as Phillip Capital. Other than that, we are also trading participant of Bursa Malaysia Derivatives Berhad, participating organization of Bursa Malaysia Securities Berhad, and also holder of Capital Market Services license. So Phillip Capital has offices nationwide with the headquarters located in Kuala Lumpur and 11 Phillip Investor Centres in both West and East Malaysia. So you are welcome to drop by your nearest branch if you have any enquiry about our investment related services. These are the Bursa Excellence Awards that we have received in the past few years. In last year, we were very honored to be awarded as the first runner-up for the Best Retail Derivatives Trading Participant and second runner-up for the Best Overall Derivatives Trading Participant. Phillip Capital is not only nationwide but also worldwide. We are located in 15 countries as shown in the map. And having global network means that we are offering a wide range of products. For futures trading, we are offering products listed in global exchange includes the popular exchanges in US such as CME, CBOT, COMEX and NYMEX. We also have exchanges from Europe, Japan, Hong Kong, Singapore and Malaysia. With our global coverage, clients can trade both local and foreign products easily with us within the same platform. Phillip Capital offers one-stop solution for your trading. The products we are offering can be categorized into three main categories. Firstly, futures, which includes diverse markets like the index futures, agricultural, metal, energy, and interest rate futures. For equities or stocks, you can trade Malaysia shares, US shares, Hong Kong shares, Singapore shares, and Australia shares with us. We do offer contracts for difference, which also known as CFD, including both local and US CFDs for those who are interested as well. So why Phillip Capital? I would say that we are your broker of choice as an award-winning multi-asset broker with 24 hours broking and execution support. If you have issues regarding your trade, you can always contact us and we have dealers ready to assist you. We do provide advisory services and send latest market news to our clients on daily basis. As mentioned earlier, we do offer a wide array of products as well. Besides, we want to ease every of you where you can just open an account with us online at any time and anywhere. We also offer free one-to-one coaching sessions for our investors and organize free seminars and webinars like this frequently where you can always learn from the speakers. And most importantly, it is free to open an account with us. For the free one-to-one coaching, we can provide you an introduction to futures, CFD, stocks trading, and product knowledge. We also coach you on the platform and charting system. So if you would like to have a personalized coaching, feel free to reach out to us and we will schedule a session with you. If you are interested to join our upcoming events, you can check them out by scanning the QR code or visit our website at phillip.com.my. I'll wait for 3 seconds for you to scan or take a screenshot. Alright. We also conduct weekly market call where we will have analysts to share market views and updates on every Monday 11 a.m. Also, we have live counter technical analysis where our technical analysts will discuss on weekly trends and potential entry and exit levels on every Monday, 8 p.m. You can scan the QR code to secure a spot now. And you can now enjoy hassle-free online account opening for stocks, futures, and CFD accounts by scanning the QR code. It will directly take you to the application page and you can just register yourself there. Alright, so here are some trading platforms that we use. First, we have our Phillip Nova for futures trading. There are over 90 technical indicators that you can utilize in analyzing the chart. You can place your order to buy or sell directly from the chart as well. It is a market depth trading tool for both local and foreign products with live market news and price alerts. If you wish to try out the platform, feel free to scan the QR code for a demo account. It is available on both App Store and Google Play. And for your information, our Phillip Nova's live charts are powered by TradingView. You can trade both local and foreign products in one account. We do offer 17 global exchanges and provide 24 hours broking and execution support. For stocks trading, we are using Poems Global, a platform with powerful stocks analytics, and it is suitable for both new and experienced investors. It can be found on App Store and Google Play as well. For CFDs, we have Phillip CFD Trader, which is an ideal all-purpose trading platform with user-friendly interface and advanced order type. Alright, moving on to the promotions. If you're looking at the US market considering to trade CME products, now is the best time for you to start. Phillip Capital is excited to bring an exclusive promotion for newcomers. For new clients that open an account with us and subscribe to the CME exchange, you are entitled to 100 ringgit touch and go reload pin. To be eligible, new clients must deposit a minimum of 5,000 ringgit into the trading account and subscribe to CME exchange. But no worries, the money in your account can be used for trading as our account opening is free. This promotion is only until 31st October, so act now and don't miss the chance. Besides, Phillip Capital also presents an exciting opportunity for traders with our Trade and Triumph BMD Edition promotion. You can stand a chance to win up to 1,050 ringgit when you sign up and start trading BMD futures with us. The promotion is open to both existing and new clients of Phillip Capital, and it is running until 30th October. So grab yourself an opportunity to win the amazing rewards before it ends. You may scan the QR code for more information. Last but not least, Phillip Capital is excited to bring you an exclusive promotion on some of our most popular contract for differences CFDs. From 9th September to 12th December, you can enjoy up to 80% rebates on your commissions fees, which as low as USD $2 when you trade the products like Dow Jones, S&P 500, Nasdaq, gold, silver, Brent oil, and crude oil commodities. Whether you are currently trading CFD or wish to start trading in CFD, this is a big deal for you. You can scan the QR code to know more information. Alright, before we dive into our topic, I would like to introduce our speaker today, Jen Zhong. Jen Zhong is the futures trading dealer at Phillip Capital, holding a bachelor's degree in finance and investment. His expertise lies in analyzing market outlook, economic conditions, and interrelated factors to provide mid to long-term insights. Jen Zhong is also a National CFA Institute local research champion, combining market analysis and technical skills to empower clients with effective trading strategies. It's our honor to have Jen Zhong here today. Let's welcome Jen Zhong.
All right. Thanks, Jelly, for the invitation. So very happy that you all can spend your time, especially after work time, to join our webinar session. So hopefully today's session will be helpful for you. And before I start my sessions, let me share my screen first. All right, so I think you all can see my screen now. So and again, very thank you for you all to spending your time. So for today webinar sharing, I will mainly cover on the most basic and fundamental, the technical analysis when you want to involve in futures trading. So people might, there's a confuse that what's the difference between trading and investment. So maybe I can just set some information based on the trading and investment. So we know that we want to grow money in the financial capital market. We need to use or utilize our money to invest in or trade some contracts or trade some company to grow our money. So for investment, like you search of certain company or certain product that you have a very strong confidence over its fundamental or economics outlook. So you place your money there for a longer term horizon and hope comes with the hope that money will grow itself over the time. So how about trading? Trading is that you utilize your money, you trade for a certain product for a quite lower and smaller time frame with the winning rate that your losses, your overall profit able to cover your overall losses, then resulted in a net profit. So I believe that most of you had heard futures before, so that's why we can have a sessions together here. So in futures, like we do not really promote invest, because invest is like you holding a company in stocks market and over a longer time horizon. But in futures, you trade for a commodity like gold, oils, even the index. So that's not a physical company for you to invest to hope come increase in the share price or dividend. But in futures that you invest in, you trade the commodity price, you trade the product price that uh, with the hope that the technical analysis might work out. So when it comes to trading, your losses and your profit is the key determinant that how to rate your trading result. So here's some golden rules that I will already conclude for you all. So the first is try to minimize your losses, because we know that we need a certain amount of money, or in futures what we call is initial margin for you in order to have in your account to hold or trade or for certain contract. So minimize your losses is the best way to preserve your capital and comes with the winning rate that able to grow your money over the time. So execute your trading plan. This is what we say that plan your plans, plan your trades and trades your plan. So before you enter certain trades, you have in your head, so for sure there's a profit taking area or cut loss area that you hope that your trade might be work out. So you need to plan yourself the TP and the cut loss, what you call is profit taking and the cut loss area before for your trading. And the third point is plan your entry and exit point before start trading. So this is just similar that what I mentioned just now. You do not to trade without a plan and putting your money in. You need to know that what's your entry point, and when the market go against you or go favor you, uh, by what the point you need to get out from the trade and take the profit, or cut the losses. So, and number four is the key main point that I think that's the most important is always set a cut loss for your trade, because over a very long time horizon, you do multiple trades, you do a lot of trade, but for sure that's not 100% of the winning rate. You need to set your stop loss for your trades in case your trading is not work out, and with the hope that you're able to preserve your capital and able to come back again for the next trading. So profit ratio the fifth one, profit ratio always bigger than the losses ratio, and 2 by 1 is better. That's why we say, like if you trading in the futures market, for example, you target you already enter the price that you target, there's a 5.5 ticks for you to taking ticks profit. But when it comes to losses, you need to plan your losses in advance as well, that your losses cannot be same tick or same ratio as profit. So in case there's the 10 trades of for trading, in case 6 work out, 4 are not cut loss, but the win rate, the profit ratio is double from the loss ratio. So obviously there's able to result in the net profit from the trading. Okay, so okay, after golden rules of trading, here's I would like to have a small introduction, very basic one for our technical analysis. Because we do technical analysis in trading, we need to understand that what the emotion that behind the market, or how come the candle is formed like this. Maybe there's a hammer, there's a big green candle or big red candle. So we need to understand what traders, buyers, and sellers is reacting or fighting behind the candlestick of the market. So the red one is the market go out is green candle, and market drop is red candle. So for in case you see a candle red color in the chart, the opening price is always higher than the closing price. The closing is always the lower one. So you might know that when the market open and over the time comes to the end of market, when the market price is lower than the opening, that's a drop of the day. So inversely, when you see a green candle, for sure there's a higher closing price than the opening price. So you might see that maybe see on a mouse click, maybe the market is here, and in the trading sessions, the market went down, up and down. So all the way, and when come to the closing sessions, the market closed here. So there's an increase in the of the day. So this also the most basic knowledge in technical analysis, support and resistance. I will sure that almost every trader, maybe there's a lot of technical indicator like Fibonacci, the Elliott wave, the Bollinger Bands, exponential moving average. There's a lot of technical indicator that you can use or utilize to for your trading. But the most important one is the support and resistance. What is support and resistance? At least 2 points can draw a line. The more point touch is better. So you can see at the first diagram, the upper one, what we call is resistance, or what we call is profit taking area, and the lower one is support. So imagine that the blue line in the chart is your price, your market price. When the market touch certain area for twice or more than twice, then you can draw a line. There's support or resistance, because that we know that at that certain area, there's a seller or buyer is reacting there. When market come up until this level and come down, and you can see every time of this level, there's a buyer to support the price, because the market might deem that the price is already cheap and they're willing to buy more at this level to prevent the further drop in the price. So when it comes to resistance, many people tend to profit taking back, because they think that market price already overpriced, cannot go up furthermore. So they might have a consensus or agreement like to do a profit taking at this area. So when you come to your trade, you can exactly know that what area that you can use the historical data to plan your trades, what the area you need to take profit or maybe cut loss. So support acceleration is a very fundamental and basic. So not only the horizontal, but also there's up for your trend channel. If break below support level, means there's a downward momentum coming. You can see in the chart, there's a green line that always, when the share price is touch line, there's a rebound. When touch here, always a rebound. So you can know that when the price is touch the support, so maybe you can maybe you can go for long and short positions. And for your information, in futures market, you actually can go long and short. If you anticipate or expect market will go up for the coming times, you can go over long portions. And when you anticipate there's a drop in the market, you can go for shorts. So how about we talk about shorting the market? That you short the price at the resistance area because you anticipate the price may go down further. So I also provide some case study for the explanation for your more easy understanding. All of these are the most real case study. So this product is our BMD KLCI index. So you can see that in this price range, the price is touched the support level for 1 times, 2 times, the 3rd times, and 4 times. But when it comes to the 4 times, many people may anticipate the price will continue rebound at this area, but there's a big red candle break below this line. So what happened that people are no longer tend to think that this is the cheaper price range or support price range, that the price may going down after that. So same goes to this case. You can see at the price, this is also our KOI contract. The price touch here once, twice, third time, and fourth. And come to fifth time, the price tend to break out with a very strong green candle, meaning that people, buyer and seller in the market, already have the consensus that market may going up. Market is underpriced at this price range. So more buyer are buying, so price will go up. So same goes to this. The price is sideways at this area, but once the price able to sustain above the support and break above the resistance, means there's a creating a bullish momentum for this price. And for this, okay, this is also our KOI. The price touch here once, twice, and third time, but follow with a candle break below. Be aware that in case when the market comes to the crucial level like support or resistance, when there's a complete full body of the candle instead of the hammer, instead of a shadow, when there is a full body of hammer break below the price, so below the support area, means there's a creating bullish bearish momentum for the market. So in case you have a long position, you may consider to have a cut loss. So these are long or shorts based on this market. When you have, imagine that you never see the candles after that. I highlight here when the market is going down all the way from here to here, and we can see the market touch the area once, second, and twice, but not able to break out even the fourth time. But when it comes to the fifth time, the market break out with a full body of green candle. What happened next? The market probably may going up after that. So same case to here. Market sideways all the way from here to here. So when the market touch the resistance or support level, the more time the price is touch this area, means more reliable of this support and resistance level. Once there's a big green candle break above this resistance line, creating a bullish momentum for the market. So this very favorable for the long positions holder. So after we talk the basic one, so here's a candlestick pattern that you need to know to distinguish or determine that is that the bullish or bearish signal for the market. The first one we have a bullish engulfing, and the second one is a bearish engulfing. Bullish engulfing is the full body of the green candle cover up the previous day, full body of the previous day red candle. So, and for bearish engulfing means today full body of red candle able to cover all the body of green candle yesterday. So as I said just now, when there's a green color candle in the price, the opening is here. So market may going up, down all the way during the trading sessions and close here. So imagine that yesterday market is opening here but close here. But today the market is gap down, is opening lower, means the market is bearish to the market. The investor is bearish to the market. So they opened at the price at lower than the closing price on yesterday. But there's a momentum or support from the buyer in the market, spike up or buying up all the way to this and until to close at this area, means that there's a stronger momentum of the day. So same goes to bearish engulfing. When market yesterday open here and close here, but comes to another day, market is tend to have a bullish momentum. So opening up, the price gap out here, but there's a selling pressure selling down all the way price to here to level here. So you can see that the selling pressure of the day is bigger than yesterday, so creating a bearish sentiment to the market. So this is what I said just now. So usually for my recommendation, when you look on the bullish engulfing, you don't look at the shadow of the candle. Just take the full body. If the full body able to cover up the full body of yesterday candle, means there's a valid or reliable signal for the bullish engulfing. So bearish candle open at above the previous candle close. Yes. So for bearish candle engulfing, when the red candle able to cover up more of the bullish candle, means that the market may going down. So when the bullish engulfing or bearish engulfing is work, or the signal is more reliable or more accurate, I would like to say that bullish engulfing, the candle the most clear is appear during the downtrend or uptrend, not sideways, even top or down. When market coming down all the way, you can see every day have a red candle, but suddenly there's a green candle coming out, cover up the yesterday candle. So there's a 10 of the signal reversal to uptrend for the price. So here also some case study for this. When market going down all the way, there's there's a bullish engulfing here. I enlarge the diagram here. You can see the full body of green candle able to cover up the full body of red candle. So what happening next is probably market may going up all the way for the coming time. So same goes to here. Sorry. When market drop all the way until this level, this is our CPO contract, and yeah, you can see that the opening price actually is able to cover up the closing price of previous day. So what happening next is also creating a bullish momentum at, or buyer of the market already reached a consensus that the market may going up for the comings. So here also some of the real case study. You can see I actually already highlight the bullish engulfing signal. So the coming candle is bullish for the market as well. So I think I can skip here this case study because it's more like a similar case. So yes, this is the final out. So in this diagram, I not actually drawing out the bullish engulfing, but how about we can find where is there any bearish or bullish engulfing here? So actually it's here, my around my mouse click. When the market going up all the way, suddenly when it comes to the top area or the height level area, suddenly the market appear a candlestick, or I call it is red candle, able to cover up the full green candle of the candle. So market may start dropping down. So same goes to here. You can see there's a bullish engulfing here appear, market down, but there's momentum that's supporting the market, so market may continue going up. Okay, so same goes to this chart. Actually, this chart is a bit have a more signal because you can see the high level is here, market going down, rebound slightly, but coming down again. Means that this is the lower highs of the market. The first one and the second one. There's a two lower highs for the market. Actually, is creating or telling you that signal, telling you signal that market is going down, market is not doing well. But when it comes here, there's a bullish engulfing cover up the full body of the red candle. We not look at the shadow, we not look at the line of the candle. So coming out next, you can hope for the long. If you have a long position, this is good because market may coming up after the signal come up. And bearish engulfing, as I said just now, the bullish engulfing is more clear, the signal is more reliable when appear during a downtrend. How about during the uptrend? So when during the price uptrend channel, and there is a bearish engulfing coming to cover the candles, means the market may turning weak. So same goes to here. You can see this is our mini Dow Jones contract. The price is sideways for the daily candle. It's a daily chart. The market is sideways all the way in the high, quite relevant height level, and there is a bullish engulfing come up. So sorry, okay. There's a bearish engulfing come up. cover up the full body of the green candle, so that's dropping. So you can because this actually is quite suitable for those traders or investors that you want to go for a swing trade. You go for a certain either long or short positions, and you hold for several days or few weeks. So after you're able to identify how come what movement potential movement coming up next, so it's easier for your swing trading. So same goes to here. This is a signal of the bearish engulfing, so market may coming out for the coming few days. So, and another details that after you look on bearish or bullish engulfing to enter your trade, how about the support and resistance? How about your cut loss and take profit taking area? Uh, for my recommendations, the the opening price of the candle of the red candle for your bearish or short positions can be your cut loss point or cut loss area, and maybe you can take the previous low level of the commodity of the product as a profit taking area. So same goes to here. This is a bearish engulfing here. You can see the full body is already covered up despite the line of the shadow of the candle. So market may come up. You can see this is our crude palm oil from around 3,800 ringgit dropped to 300 and 500. That's a decrease of 300 ringgit in palm oil. Is actually quite a lot of money. So here also when market going up and there's appear bearish engulfing and drop all the way. So I think I can skip for this one. And actually bullish engulfing and bearish engulfing is a quite simple and very easy to understand, easy to discover in your chart. People might tend like this is not worth to have a look, but from what the case study I showed just now, actually the real signal is not too necessary to be very complicated or difficult to understand or difficult for traders to discover. So actually bullish and bearish engulfing can act as a reference for you for confirmation before you enter your trades. So after we talk about bullish and bearish engulfing, we'll have a look on the another candlestick pattern is what we call hammer. Hammer is the shadow should double more than candle body. So what the function of hammer is usually to catch the trend rebound or trend reversal. So to catch the trend uptrend, bullish hammer candlestick is to catch uptrend or for you to have a long positions during the price is downtrend. So I think I can use a case study for more easier understanding. Can see the charts going down all the way. There's no bullish or bearish engulfing appear in the chart, but there's a hammer. The shadow of line is need to be at least double than the body candle size. So it's a valid hammer signal for you to determine what's the next direction for the market. And here's some case study. Can see the shadow of line is double up, at least double of the candle body size. So market may have a trend reversal or we call rebound in the market. Actually, it's not different that from bullish or bearish engulfing. Hammer is quite useful for you to have a look when the market is going uptrend or downtrend, but you wait for another opposite directions for you to determine the starting point or what we call is the price before the price is really going up for the next directions. So for this also the market going down all the way, and when coming down to this area 3631 at this level, why there is a green hammer appear? Because the buyer on the seller in the market may think that, oh, market is already dropping so many days, so many weeks, the commodity or the index is already comes to a price that relevant, quite uh, quite worth or quite undervalue. there's a potential upward movement in the market. So the price are here coming down here, but in the end of the day, trading days, there's a momentum that already eats the market price to the above the opening price. So actually you can take this as a signal for the bullish momentum. Okay, here also you can see the more longer the shadow is than the body candle, means there's more valid or more reliable for the confirmation for the signal. And for now, we talk about bearish hammer candlestick is to catch downtrend or during the price is uptrend. You can see in the chart that the price is going up all the way, but when there is a hammer, no matter green candle or green color or red color, but when there is a hammer appear in a quite relevant high level, means there's a trend reversal for the trend previous trend. Can see here the price is coming down before this, here the mouse click. So at this level of price, the market is already going down, but the market never or doesn't close at this level. Before end of the day, the trading day, there's a valid or strong momentum open eat up the market price to here to level. So you can see that there's a support coming into the market price. So what's coming up next is market may have a bullish movement for the next few days or for the swing trades. And this is the case study already I find in the China A50 July contract. So market going up for daily, you can see this daily chart. But when it comes to this, hammer appear. The tail is at least double more than the body candle. So this is a trend reversal. Before you want to enter the short positions, this is a signal that very good for you to consider before to enter it, maybe long or short positions. And when you see this signal, already told you that market already hit the ceiling or the max level of the price for this recent trend. So maybe you can plan for a short trades or short positions. And what's really coming out next is the market really dropped from I think around for 15,000 to 30 something thousand. So here also the shooting star is what we call is inverted hammer, is to catch downtrend or short during the price is uptrend. The shadow line also same, need to be at least 2 times more than the candle body. The more is better because the signal is more clearer when the line, the shadow is bigger than the body size. So this also the real case study. Just now we talked the real case study for the hammer. So now you can see for the inverted hammer. When the market are going up until this level, the inverted hammer appear or here. Market already hit a quite high level, and the inverted hammer appear. So when there's a signal appear that maybe more attract more seller to sell the product or commodity in the market. So resulting there's a dropping in the market as well. And here is another case study. Market going up all the way, and there's a very super long tail or super long inverted hammer at this level. So there's a reversal of the trend. So after talking about engulfing the hammer, the shooting star, so I would like to have a small details or sharing on this head and shoulder. Head and shoulder actually is not a single candle, but it's a combination of many candles throughout the days or weeks or even months. The market may going up first. At first, you can see there's a shoulder and heads, like shoulder and head of people. When that head is need to be higher than the left or right shoulder. So when you can see the price movement like this, and how about when the market drop below, start to be below the neckline? Is it a long or short signal? I can say if the price is drop below the neckline is obviously a short signal for your positions. So this is the chart that I think is more easier illustrations. You can see the price is going up, creating a left shoulder first, and the price move maybe in days or few minutes, and when the price is coming here, it's breaking above the left shoulder and come to another height level, but the price is coming down. The price is coming down and have a small rebound here to form a right shoulder and come to here. So the blue line here is a neckline for the head and shoulder. If the price is able to sustain above the neckline, so maybe you can hold for your long positions, but it's not good to enter another hold because market already tell you that the head and shoulder chart pattern already appear. And if the market break below the neckline, so you can see the market may coming down all the way. So this is the case study. Market is going up, creating a left shoulder. This is the price for the palm oil January of 2025. Means it's the current active month of the current contract month. So forming a left shoulder here, and the price touch the support level. Maybe you can draw based on the previous price movement and going up to another height level. But in this way, you can see this is an engulfing appear. I try to enlarge the chart. This engulfing. The price, the red candle, or full body of red candle is cover up the green candle. So this is one mini chart. Actually, is applicable to daily or mini charts. And creating a head coming down here. And when the market rebound and here and coming down, but still maintain above the neckline. So doesn't mean that market will going down immediately. But once the market drop below the neckline, market may going down all the way. So not only this charting is not only telling us that there is the bearish engulfing or head and shoulder in the chart, but also there's some lower highs in the chart. The first one, second one, or the third one. The every time of rebound of the market is not strong as the previous one. So you can see that the market is turning weak. So there's a signal for you that consider for short positions. And how about is the inverse head and shoulder? It's actually is the same pattern to the pattern I discussed just now, but it's a very just opposite or inverse directions of the head and shoulder. The market coming down all the way, creating a left shoulder rebound, cannot go further higher, and drop further lower, creating a head and rebound. So at this area, you can see there's a left shoulder, head, and right shoulder. So neckline act as a support or resistance level. Once the price is going above this level, it means already creating a reversal trend or bullish signal for the market. So this is case study for China 850 October contract. So we can find where is the inverted head and shoulder pattern. So this, the market coming down. So this is the left shoulder. The market cannot break above the neckline or support level, going down to further lower. So this is head, and once again touch but fail to do so, and creating a right shoulder. Okay, here we can see the candle already maintain or break out from the neckline, but cannot sustain. Once there's a big candle dropping sharp, break through the neckline, means there's a dropping signal. So actually, head and shoulder is have a quite different with the bullish engulfing, because you're not looking at the single candlestick, but the combinations of the more candlestick for you to determine the trend for a longer time horizon. And here as well is the inverted head and shoulder, creating a left shoulder, head, right shoulder. Once the market able to break above this level, and the market may come out next. So I think today I just cover on the most very fundamental and basic technical charting for you to determine the how the signal or psychology of the behind market. We're telling you that why buyer is buying more than seller, or seller is selling more than buyer, because you know that when you're buying something at buying something product at certain price, for sure there must be a seller to sell you, only you able to buy. So when there is a green candle, meaning that the buyer is buying more than seller, there's more buyer in the market. So how you determine to study the candlestick behind to tell you uh, the momentum or the sentiment market is how. So I hopefully that today's sharing or technical will be helpful for you. And sure, you can explore many technical and indicator in Google or in your charting that maybe have a Bollinger Band, the Fibonacci retracement, or ISL, or maybe moving average. So it's not only the single indicator that for you can use for your trading, but you can use maybe 2 to 3 signal or technical to determine the signal. When there's a double or triple confirmation, means there's a more confident for your trades. So at last, for the trading, because we keep roll over our money, we keep rolling our money for multiple trades. We're not investing in the same product, in same company for very long time horizon. So never forget that profitable from trading is always the most important purpose for you to determine your ability of your trading plans. So please do aware that always protect your capital before you losing out, because when you're losing out maybe 50% from 5,000 to 2,500, okay, so you need to make another 100% able to cover up your initial capital, and always put and execute your stop loss, because the most problem when it comes to trading is we know that what the area or what the price we can take profit or cut loss, but our psychology not necessary to be rational when we're holding or when the market is going opposite us. So always put the stop loss, and when the market is really hit our stop loss, just execute, because we cannot make our trades 100% of the win rate. But when you're able to protect your capital from 1 times, 2 times, or from multiple times, when you do for one, you're able to profit for 1 time, so you're able to make a net profit from your trades. So there's also some rules that you tend not to do when you're trading. Is the first one, over trades. No over trades. Just trade the amount or with the money that you comfortable with, because when you trade with the money that already create a burden for you, not with a free money, when the market really coming down or going against you, you cannot make a rational decisions, because emotional is and your psychology is affecting you. And the second one is don't to be emotional for the trades. You need to have plan your trades and trade your plan, because you already know what the price for your entry, you already know what the maximum losses you can lose in the trade, and the profit in case the market is going favor by you. So, and the third is don't to be overconfident. You can see maybe you already see the bullish engulfing, you can see there's a head and shoulder, you can see there's the RSI, there's a very multiple confirmation of the several signal telling you that market may go up next. But don't be too overconfident. In case market is going up but never hit your TP or profit taking area, market may come down and hit your stop loss first. So just accept everything that happened to your trades, and the most important is execute your plans, and don't think you are the lucky one, because maybe maybe we holding certain position, we may think that market will go uh, follow our expectations or our analysts. So in case market really hit your stop loss and you never execute, but you are lucky sometimes because market rebound after that. But how about market hit your stop loss but you never execute, but market coming down more all the way after that, you lose more money. So don't think you're the lucky one, and just be rational when trading, and don't compare the trades with anyone, because and everyone's strategy is different. that maybe your trade is able to earn 5 ticks, others is able to earn more ticks, maybe 10 or 20 ticks. But don't compare, because over the time, the price you enter and people enter is not the same. So just stick to your strategy and plan. Maybe you can involve trading for a certain time horizon, and you can find out the plan that you comfortable with, or you suitable with it. And last but not least, trading is not about just study the psychology of the technical candle in the chart, but it's 60% of the psychology. Because when you do trading, you can see your money is volatile there, going up or down. You can see your money is making profit or making losses. For sure, will affecting your emotional and psychology. So the most percentage of trading is about psychology, and 30% I would say is on executions, because it's also important that you execute your plan. Maybe you know that you're already able to determine the accurate profit taking area or cut loss area, but you're not able to execute. So that's also a main factor that many investors or traders not able to make some money for a long time horizon in the market. So execution also one of the major problem, because psychology and emotional also you're affecting your executions. And 10% up to your analyst and anticipation. So that's the reason that I glad to have a webinar sharing for today, because hopefully today's sharing is helpful for you all, and you're able to study the candlestick or the charting pattern in the trend, how you're able to anticipate the potential coming trend. uh, when you do your homework and know what potential, maybe 70%, when you see a bullish engulfing there, maybe 70% that you know market may going up. So the rest is on your psychology and executions. So I think that's all from my presentation. In case you have any Q&A, you can drop your question in the chat box, and we answer that. Okay, we got one question here. How about when the market is not hit the TP or cut loss reset? Okay, so when the market is not really hitting our profit taking or the cut loss area that we set before, market is not following us. Maybe you can see the market is already almost 1 bit away from your profit taking. So in order, when market is really coming to close to your profit taking target price, you can choose, you can taking less profit there, or wait for the market. So if you wait for the market, that's a risk. So maybe you can set a break even price that at least to preserve your capital or protect capital if the market is not hitting your uh, TP price and coming down next. And due to time constraint, we choose another questions. Uh, can you okay? Can you explain how to determine the cut loss and profit taking area for the head and shoulder chart pattern? So when you see there's a head and shoulder chart in pattern in the chart, neckline is always the support level or resistance level for the inverted head and shoulder. Neckline is the most important for you to determine you want to long or short positions, and left or right shoulder is maybe market in case coming up like this area, right shoulder or left shoulder can be your first resistance or first cut loss for your positions trading. So always remember that the neckline is always the crucial line or crucial area to determine your plan, maybe go long or short, but left or right shoulder or maybe the level of head for you as a reference to have a profit taking area or cut loss area. Okay, so I think that's all for today. Hopefully today able to brief you more on technical knowledge before you start your trading. Today sharing is quite to a beginner level, that but this is a very important and crucial information you need to have before you start trading, because maybe in further you can learn for Elliott wave, Bollinger Band, or Fibonacci retracement that involve a lot of quite details study in figure, but be aware that support and resistance, bearish engulfing is more useful and simple ways for you uh, to execute and plan your trading. Yeah, that's all from me. Thank you. So I will pass the session back to the MC.
Alright, thank you, Jen Zhong, for the insightful sharing. And I believe all of you have gained some knowledge from him. So if you're ready to step into the exciting world of trading and interested in opening an account with us, you may scan the QR code here. We do offer stocks, futures, and CFD trading. And most importantly, it is free to open an account with us. So you may take a screenshot and register. Alright, so for your attention, we will be having a private coaching session in the upcoming week. It is a personalized one-on-one coaching event which will start from 21st October, Monday, to 25th October, Friday, where you can choose a day that suits you the best and book a time slot approximately 1 hour for each person between 10:30 to 5:30. So you can have the session physically at Phillip Capital Penang, or we can schedule an online session with you at your convenience. So you may scan the QR code here to register for it. And also for those who would like to schedule the personal coaching session, you may also contact Jen Zhong or me through WhatsApp to book your preferred slot, yeah? So this is our phone number. You can contact us through WhatsApp and by scanning the code. And if you would like to connect with us, feel free to follow us on Facebook, Telegram, LinkedIn, and Instagram. We do post market updates, promotion campaigns, and events on social media. You may also subscribe to our YouTube channel to check out the videos and visit our website for more information. This is the contact for Penang branch. You can reach out to us via phone call, email, or just walk into our branch. We are located in Georgetown and we'll be very happy to see you. And here are the branches contact for you to reach out depending on your location. Alright, so here comes to the end of our webinar today. We really appreciate everyone for your time and thank you again, Jen Zhong, for the sharing. We hope you guys enjoy it and we shall see you guys again in the upcoming events. Thank you and have a good night.